Hey, hello everyone. I'm Hari. I'm one of the founders of Cantina TV, and today I have a very special guest, David from Level Money. David, do you want to start by introducing yourself?
Yeah, sure thing. Great to meet you all, or great to be here. I am David. I'm one of the co-founders here at Level. And at Level, we're building a decentralized stablecoin protocol that issues Level USD. The backing of Level USD is USDC and USDT that are deployed into DeFi native yield sources such as lending and restaking. And you can stake your Level USD in order to earn yield from these sources in our staking contract. We've been working with Cantina and Spearbit on the security side, but happy to dive into more about stablecoins today.
I know stablecoins are such a hot topic right now, and I want to start at the very beginning. Could you explain what is a stablecoin to everyone that's actually hearing it for the first time?
Yeah, good question. Stablecoins are essentially tokenized dollars on chain. The way that the majority of the stablecoins that are out there work is that you usually give somebody dollars from a bank account, you send it to a stablecoin issuer like Tether or Circle, and then you receive back a token on some sort of blockchain, whether that's Ethereum or Solana or Arbitrum or Base. You can use that token in many different places. You could use it to pay people. You could use it in DeFi. You could use it to trade. Some people just like to hold on to it because they like having access to US dollars. And then at any time, you could redeem that token back for your underlying cash. And that's how what sort of fiat, like how most of the stable coins that are out there work. The way that, I guess, just a quick plug for Level, the way that we work is a little bit different because we actually build on top of these fiat-backed stablecoin issuers. And it's a similar sort of mechanism where you exchange one form of value for another. In our case, you exchange USDC, which is a stablecoin itself, for Level USD, which is a tokenized version of a dollar again. And then at any point, you could redeem that back for the underlying collateral.
Okay, that's amazing. So I feel like stablecoin really like captures some of the original visions of blockchain in a way that, okay, it's a system that anyone in the world can interact with. There is no barriers and it's interoperable across the world. Like we run a company that is a marketplace that connects security searches and customers looking for security reviews. And stablecoins have been a huge win for us because we can pay anyone in the world in stablecoins. We don't have to deal with all the wire transfers. We don't have to deal with all the mess of international banking. So stablecoins, in my opinion, is like one of the core utilities that a blockchain enables. You can pay anyone across the world in the same asset. You don't have to go through an intermediary that is so restrictive like some of the international banks. And it's such a simple but useful application. So you mentioned about yield, and I want to double down on the question on yield a couple of times. And the first one is, can you explain what is going on in the US in the last few years when it comes to like stable coins, and how is the situation different today?
Yeah, so I think there's a couple ways to answer. Rewinding back to 2022 was when me and my co-founder first started to hear about regulations being introduced to the United States that will make it easier for people to interact with, so mint, redeem, or transfer stablecoins. And that's actually what got us into the space. We believed in stablecoins 10xing because of regulatory clarity. And so we pivoted from the previous idea that we were working on to going all in on becoming a stablecoin issuer. Now, obviously, regulation, it's what we quickly found out is that it moves a lot slower than the pace of startups do. And it's only recently that with the change in administration, that regulatory clarity is on the precipice as opposed to something that's just more of an abstract theory. I think the story of regulation, specifically with stablecoins in the United States, it was like a lot of people warmed up as they started to learn more about the industry. Because back in 2022, I'm sure you remember, Hari, that sentiment with crypto was extremely bad. I think it was to a certain point I was telling people what I did, and when I would say that I was in crypto, then sometimes the reaction was, "Oh, that's like a useless industry. It's only for speculators. It's only for gamblers," without realizing sort of the undercurrent of transformation that we were going through with stablecoins becoming a widely adopted payment source. And so, obviously, with anything that you are only starting to learn about, it's facts and presentations and reports that add legitimacy to the things that are new. And so I think like a few facts that, I've started to hear a lot more in mainstream media outlets as well as from the regulator side the size of stablecoins, I think, certainly helped with legitimizing stablecoins as an industry. And more specifically than that, I think a lot of folks within government realize that stablecoins are a sort of structural buyer of U.S. securities. And I think I saw CoinShares, I think, estimated that stablecoins own around like 50 bips of U.S. total debt, which is $35 trillion outstanding. If Tether and Circle combined their treasury holdings into a country, it would be the 16th largest holder of U.S. treasuries. And if with current levels of growth, I think CoinShares also predicted that stablecoin issuers would be the 5th largest holder in 5 to 10 years. So all these things, all these facts and statistics made folks realize that this is actually happening, right? And it's not, this isn't just like a promise, it's something that's actually happening on the ground. And that, I think, is the moment where there was an inflection point for stablecoin issuers and a shift in sentiment for regulators worldwide.
That stat is like really insane, like how two companies are almost acting as almost like a country at this point. And what is your take on that? Do you feel like Level at some point would go straight to buying US treasuries or US debt and like tokenizing it on chain?
Yeah, and apologies for the noise. I think there's some emergency workers going around, but I think that we wouldn't put it out of the question. And specifically, I think that there's one big shift that has happened in the last year that would make it much easier for us to do so, which is basically that tokenized treasury bills have become a mainstay within crypto. They've grown to over $1 billion in market cap over the last year and a half. And some of the most major names in finance, the BlackRocks of the world, the Wisdom Trees of the world, the Franklin Templetons of the world, they're coming online and bringing treasury bills on chain. And so the big shift here actually is that because of this, previously stablecoins were very much like an off-chain business. Like if you look at Circle or Tether, the real only like on-chain component is the ERC20. And then everything else, right? The issuance, the mints, the redemptions, the management, the yield distribution, that all happens off-chain. And because it's much easier now for businesses around the world to adopt tokenized treasuries, it's also a lot easier for stablecoin issuers to bring more and more of their operations on chain, which is the sort of position that we find ourselves in, is that we're mostly an on-chain business. So the mints, the redemptions, the reserves, and the sort of yield issuance, that all happens on chain. It's a lot more auditable, and people can know that the underlying fiat is being custodied by folks that they know and trust already. And so I think that is a sort of a big tide that ourselves and other stablecoin issuers can be able to benefit off of.
Okay, speaking of yield and distributing yield, so what do you think? Tether had a record year last year. I think they made around like $30 billion last year in revenue. Last quarter, Q4, they made like $6 billion, I think, if I remember correctly. What do you think this yield is coming from, and where do you think this yield is going to today with these stablecoins like Tether and USDC?
Yeah. So for Tether, the other remarkable part about earning $13 billion in profit is that they did it with 150 people. And so I think by headcount, that actually makes them the most profitable institution in the world, more profitable than Goldman Sachs, more profitable than BlackRock, all these names that we're very familiar with. In terms of where the yield is going for the sort of incumbent stablecoin issuers, what they enjoy is that they, by design, they don't pass the yield back on. And for the most part, these stablecoin issuers are sitting on the yield. And so, and in some cases, so is, for example, in Circle's case, most of that yield is being passed on to the distribution partners. The most famous of which is Coinbase. And so Coinbase, if you look at sort of their public earnings reports, you'll notice that a significant portion of the revenue starting from 2023 was coming from interest from stablecoin arrangement, or interest from these revenue sharing agreements that they have with, and hundreds of millions of dollars of revenue were being generated that way. I think that this also sets the stage for for startup stablecoin issuers to be able to take some market share away that way by just simply passing the yield back on. And so for us, a sort of core part of our go-to-market strategy is generating yield from on-chain sources, most notably lending protocols, and then passing that back on to the user to counteract the lack of yield that you would be getting from just holding USDC on-chain.
Okay, I think that's a very simple pitch for users. These companies like Tether and Circle, they're generating a lot of money by holding onto your stablecoin deposits. This is money that you can earn by switching from one of the stablecoins to a stablecoin like Level, and that's a very simple value proposition for your users. I'm not losing out on interest if I'm like holding Level USD. And can you explain why in the past in the US it was hard for stablecoins to issue. It's almost by design, but can you explain to the users or the people watching what about US made it very difficult for stablecoins to issue yield on chain, for example?
Yeah, so the short answer, it again comes back to regulation. More specifically, stablecoin issuers, I think, um, were conservative to classify their stablecoins as securities because it was very hard to register as securities for a sort of crypto company. And so that argument for it's very, like, I guess on the other side, it's very hard to make the argument that your stablecoin is a security if there's no economic value that's being passed back to the user. And hopefully, one of the sort of wishes that I have with the upcoming sort of stablecoin regulations here in the United States is that they leave some amount of room for a sort of compliant path to passing back yield to stablecoin holders, especially if the yield is coming from either very safe sources, right, 3-month or short-dated treasuries, on-chain repos, or from on-chain and auditable sources such as lending yield. I think that would make it a lot easier for folks within the United States to receive yield. And until we do that, the most stablecoin issuers, ourselves included, will not be able to offer their services within the United States. So that is something that is a hope for us.
Yeah, you touched upon the stablecoin bill that's apparently in the works right now. Do you have any thoughts on that? Do you have any hot takes on it?
Yeah, not too much context, and I'm sure there are people who are much smarter than I am that are reading and parsing the bill and can offer takes on the bill. I think what I will say is that there was a little bit of a market change from, at least when I read the bill, from like it seemed like there was much more room for innovation. There was like a sandbox left for people or for issuers that were less than a certain size, and I thought that was a very promising sort of direction to be taking the bill in.
Okay, that's amazing. Okay, now I want to talk a bit more about like security aspect of building a startup in crypto, especially in the stablecoin sector. You mentioned like you're going after on-chain yield. What are the risks associated with offering something like that, especially on the security side?
Yeah, certainly. So I think that we are working basically all on chain, right? And so the sort of primary risk that comes to mind is on the smart contract side. So the yield or the stablecoin itself, the way that we manage the reserves, all of that is currently governed by code. And that code needs to be audited. It needs to be reviewed by folks who review contracts for a living, like yourselves. And then on top of that, as like an early stage protocol, we do want to leave room to be able to be agile and adaptive and adapt to the market. And so to that extent, we do rely on permissioned addresses somewhat. And so another sort of risk there is like the multi-sig security. And I'm sure that this has been on many people's front of minds ever since the Bybit hack that happened a couple of weeks ago. Additional risks that I can think of, and all of the risks that we actually have are in our docs. You can go to level.money to find a list of the risks that you might incur by using Level USD. Other risks include the risks of the dependencies that we rely on. Ave's smart contract risk is the sort of main one. Eigenlayer smart contract risk, symbiotic smart contract risk, et cetera, as well as the risk that these lending protocols are exposed to bad debt. And so in the event, for example, some of the watchers might remember last year, there was this whole sort of crisis with Curve, and there was a lot of concern around Aave potentially having a bunch of bad debt. And so that's another one of the risks that users should be aware of before USD.
Yeah, I think that's a very challenging problem. You have to manage all this on-chain risk that could be like smart contract risk and also like economic risk. The lending protocols you are using, do they have the correct risk parameters set? And if you want to become competitive as a lending protocol, on the one hand, you need to offer like good yield, good ability for people to take risk. But on the other hand, you have to make sure that your users don't get wrecked. It's a very fine balance for everyone involved. And yeah, it's a challenging problem to work on. And I think that's what makes it somewhat exciting. On the same topic as well, you mentioned the multi-sig risk. And as you said, it's a hot topic right now because the Bybit incident is the largest hack in the world. It was a multi-sig hack for those people that are not aware of it yet. But I think nearly everyone in security in like Web 2 or Web 3 is at this point like aware of this incident. But I've noticed that your team was worried about multi-sig risk even before the Bybit incident, and you were like ahead of the curve when it came to it. I'm curious to know about your thought process into, okay, why were you worried about multi-sigs even before the Bybit hack happened? Why were you ahead of the curve there?
Yeah, great question. I guess there's a couple things. So the way that I think about our protocol, our business, is there are opportunities and there are risks, right? And on the risk side, I would segment them into two things. One are risks, like manageable risks, and these are risks that actually, if given enough opportunity, you'd be willing to take on. And then there's existential risk, where if this kind of risk happens, it's probably long tail. But if it does happen, that's the end of your business, right? And examples of existential risk for different kinds of businesses include an existential risk to Circle or Tether could be that their banking partners go under, which is something that happened back in 2023 in March when Circle briefly held $3.3 billion worth of reserves in SVB. This is what I define as being existential risk. The existential risk for us is certainly on security, right? Because if we were to have suffered something on the order of magnitude of the Bybit hack, where 10% of our reserves are just taken by some sort of state actor. That is, as a startup, we can't really bounce back from that, right? It's really difficult to be able to bounce back from that. Not impossible, but very difficult. And so we treat this extremely seriously because it's something that could just basically take down the entire business. That being said, I guess to your point, even before the Bybit hack, there were other instances of multi-sig being exploited from a sort of a UI compromise. I think the Radiant hack and the Wazir hack are two that come to mind. And so we've seen enough instances where it's okay, we probably have to start taking this a lot more seriously. And it's not just like a one-off issue, but just broadly speaking, I think the way that we approach security is that we treat it as an existential risk, and therefore it is one of our highest priorities.
I think that's a great answer. And we get to talk with a lot of startups because of the position we are in. And it's very rare to see a startup at this stage taking security, especially on the multi-sig side, seriously at that point of time. So I think that is something that your team has really done a good job in. Today, if you talk to everyone, they understand it's important. But you did that at a time where nobody was actually thinking about it. So I think that's amazing to see as a company working with many startups.
And I would be remiss to say if I didn't say that we stand on the shoulders of giants like yourselves. So being able to rely on you guys for expertise, being able to rely on sort of community members for expertise, I think that has been one of the ways that we've been very much supported. We felt very much supported in our obsession over security.
That's amazing. Okay, now I want to change questions to like building a stablecoin company. How do you plan on taking away distribution from these very large players that are tightly connected to exchanges, not to the government even? There are these big players out in the market. How do you plan to like take some of their PBL, take some of their distribution away?
Yeah, I think at the way that we currently work with these incumbents is that we're much more cooperative than competitive with them. Because at the end of the day, we do take USDT and USDC, we deploy them, and we're essentially creating use cases for USDT and USDC. So at the moment, we're actually building on top of these stablecoin players. I guess the difference between Level USD as a stablecoin versus just raw USDC or USDT is that, as I alluded to before, we do pass back on yield. So we pass back the lending yield that we generate from Aave and other sources, including restaking. And then the other, I think, thing to note is stablecoins are such a big market that even it's being able to take 50 bips of this market can still yield sort of a venture scale opportunity. And so it works out to, you have to find your niche, right? And for us, being able to rely on folks who wanted to source this lending yield in a single asset, as well as at the same time sourcing this restaking yield, I think that was one of the reasons that we were able to grow. And I think the last thing I think is that because we're a decentralized protocol, I think it's much easier for decentralized protocols to grant ownership of the protocols directly to its users. And so that is one advantage that we have against the incumbents that we'll look to take advantage of.
Yeah, I think that's amazing to hear. And I definitely agree that the stablecoin market is massive today, and it's going to become even bigger in the next couple of years. Stripe, for example, they had an annual letter where they talk about stablecoins. And there's a company that manages, I think, $1 trillion in transaction a year. So for a company like them being so like all in bullish on stablecoins, that's a sign that, okay, this is where the future of transactions online is going to go. The other example that someone from Vanik brought up recently in a conversation was There was apparently a public company, I think it was DraftKings, which pays a lot of fees in transaction. They pay a lot of money in transaction fees because they have to distribute money to their users. And an analyst in a public call asked the leaders of the company, "Hey, are you planning on using stablecoins to cut down on the fees?" So I really think the next couple of years, stablecoins are going to have a massive influx in use cases. It's going to decrease the amount of fees that some of these traditional players are charging, which is sometimes like egregious. It's going to enable like people around the world to finally go after US dollars, because in many countries, their local currency is not as good, in the sense that you are in Argentina, for example, by holding on to the local currency, you're losing value every single day. So I am very bullish on stablecoin. It looks like the entire world is bullish on stablecoin. So even capturing like a tiny market that is a niche at the beginning can be like massive for any company in the space. So very excited to hear that side. And I want to end this conversation with maybe a funny question that often comes up on Twitter. Like, where does the yield come from for level money?
Yeah, so that is something that is one of the top sort of maybe 5 questions that we get on a weekly basis. But as mentioned before, the yield that we generate comes purely from on-chain sources. And right now, this is Aave yield generated by USDT and USDC that we deploy into Aave, that we lend out on Aave. And then we take those receipt tokens and then we restake them on restaking protocols like Symbiotic and Eigenlayer. And in the case of Symbiotic, we generate incentives in the form of Symbiotic points, and we pass all those rewards, both the restaking incentives as well as the lending incentives, back to the user. All of this is verifiable. We've built a dashboard around it that you can access on our website as well to see how the yield has changed before. And yeah, that's how we operate.
Okay, that's very simple and easy to understand. And do you plan on expanding the amount of sources of yield? Like, how do you think this will grow over time?
Yeah, I think as we grow, there's certainly a question around scalability. That being said, just on Aave, there's around $6 billion worth of USDC and USDT that are lent out. If you expand lending or stablecoins that are lent out on all lending protocols, that figure rises to around $8 to $9 billion. And then that's just on mainnet. If you include other chains, I'm sure that it would go into sort of $10+ billion. With that market cap just itself, I think it's possible to create a stablecoin that is $1 to $2 billion in market cap. And then the question then becomes like, how do we expand that? And for that, I think you're just going to have to be tuned in, because we have some things that we're working on in the background that we're looking to use to expand our TAM.
Okay, that's amazing. I think that's all the questions I have. David, do you have any final thoughts, comments to people listening?
I think, I think this year truly will be the year of stablecoins. I've been saying this since I entered the space, which is back in 2022. But the things that are happening in sort of Washington, the amount that I'm hearing about stablecoins from not just crypto folks, but also from folks in the real world, from regulators, from government officials, I think it really is a tone shift based on compared to the last couple of years. And so I'm really excited for what's to come.
Yeah, I'm also genuinely excited about stablecoins as well. As a company that uses stablecoin, as someone who also uses stablecoins in personal life as well, I think they are an incredible use case for crypto. And I think we have all the correct ingredients today to make stablecoins like available for mass market. We have better UX for crypto. We have better wallets. We have better regulations. We have like traditional banks and traditional like off-ramp supporting stablecoins. So I'm also extremely bullish on stablecoins. I think this is going to be the year of stablecoins, as you mentioned. So once again, thanks, David, for coming to this conversation. I learned a lot about stablecoins, how you're thinking about it, and I hope our readers also, or listeners, also like learn a couple of things. Yeah, good luck on Level Money. I feel like this is really the year of stablecoin, and I wish you success in the startup.
Appreciate it. Yeah, this was fun. Thanks for having me on.
All right then. Bye-bye.